Right, time now to take a look at the week that was on the markets, and as promised, we are joined by Managing Director of Lehumo Capital, Mr. Maudi Lentswane. Thank you very much for joining us.
Thank you for having me.
Let's start with the upward pressure on CPI. Is it really going to come at 6.4%, as already Gloria has alluded to, from 6.2%?
No, most certainly. I think the inflation has been obviously under a lot of pressure. In the past couple of months, and granted, most of those factors is your food inflation, which has obviously been, pushing up constantly. But also, I think we've got the rand. Our currency is so weak that is not really helping some of those inflationary pressures. So it continues to have that upwards trajectory. And of course, those 6.4 number, it seems within the reasonable expectation.
We're getting quarterly food price inflation figures normally, and they seem to be on the uptick all the time when they come out. And given the increase in the petrol price, this is actually going to have an impact on production prices as well, the PPI levels.
No, most certainly. I mean, there's a combination of, as you said, the food inflation, which has constantly been rising, and we can understand the petrol price being high. It's costly to produce, to move goods around the economy. But also with the drought that we've had, we're still feeling the pinch of, the negative effect of that drought that we had into last year and the beginning of this year. So those are some of the factors that are really putting pressure, particularly with the food basket. Yes, also the currency has not helped much. We're currently sitting with the rand at the weakest levels, and they continue to be more pressure on the emerging markets currency as well as the rand. So those pressures, combination of all those factors, are putting a lot of pressure on inflation.
Now, when we look at commodity prices, we've been looking at the JSE. It has been a normal trading day, especially this morning. But when you look at the week that was, there had been some normal trading days, something that is not happening with the markets fluctuating sporadically, not having those knocks. We never had any kind of turbulence this week. Are we likely to see that filtering through into next week's trading?
I must admit, you're correct. The JSE has been somehow shielded, from all the volatility that we've seen. We had a fair share of volatility, but it was not anything that we saw in other parts of the world. We still remain well above around the 52,000 on the all shares index. So we haven't dipped below that 50,000. Despite all this tension and the volatility that, with the negativities that we've seen, around the Brexit. Brexit is certainly at the center stage of what's happening globally with the equity markets and the currency market. But yes, we've actually have been not reacted negatively as you will. And I think it's more of a wait and see kind of approach that we've seen on the market in general. The day is the 23rd of June, when eventually we get to find out whether the British will decide whether to leave the Eurozone. And I think a decision to leave will certainly see an intense volatility. We'll see more volatility pick up. We will not be immune from the volatility. We'll certainly see a lot of volatility coming into that. But we've already begun to see it. I mean, we've seen wild moves from the gold price. We've seen the moves on the currency market. We've also seen a fair share of volatility on our equity market, but not to the extent that one would have imagined.
One knows that we have to let the Britons decide next week, Thursday, but then the problem here has been those who are propagating the idea of staying within the European bloc are saying that it will have very good economic implications in as far as trade relations are concerned. I mean, even yesterday when BMW was launching their new models for 2040, they were saying that they are for the idea that Britain should not exit the European bloc, whereas there are others who are saying, let's get out of here.
No, most certainly. I think the whole tension among all the European Union members, it's not new. We've had the same kind of debate with Greece in the past. A lot of unhappiness, and you can understand with the slowdown that we've seen, the pressure that we've seen on the economy, many people will be upset, and they might feel that the whole Eurozone, the union hasn't actually worked for them. But if you look at it, there has been benefits of the whole union formation itself. There are those that are unhappy, and of course, it will gain momentum as we get all these sorts of pressure. The reality is that we've been under pressure. The global economy has been under pressure for a very long time. So you are likely to see these radical measures and radical opinions being taken. Some of the decisions that might not be in the best interest of the country, particularly in the long run. So very rational sometimes, especially emerging or coming from this type of volatility and the pressures on the economies. So we certainly of the view that it's going to be very tough if Britain does leave the Eurozone. It's going to be very isolated, and it's going to take them into a recession, something that they will certainly take a very long time to come out of. So the price to pay is quite heavy, and I think they will have to decide as to whether they want to continue and take such steps and move out of the Eurozone, despite all the negative impact that they're going to have to face with.
All right, now let's wrap it all up with the oil price. We've been seeing in the past 6 months that it has bounced back from the $30 levels and went to $35 levels. And right now, currently, it's standing at around $48. Going forward, what is happening with this upward trajectory of the oil price?
Absolutely. Oil price has recovered quite nicely, and I think we went above the $50 mark. Many are now targeting around 60. And this is primarily because OPEC members have been in the past, they never really cut production. And I think at some point, when it hit the $30 a barrel, the feeling was that it was slightly oversold. And of course, with the U.S. shale market having to cut back because it was no longer profitable for them, they cut back on production. And as a result, it boosted the oil price. So I think that boost was coming from the fact that there was a huge market that was coming from the U.S. side, which began to feel the pain. And as they were cutting back on production, we saw the recovery in the oil price. But also demand picked up somewhat. Where to from here, your guess is as good as mine.
Okay. Well, I don't have a guess at the moment, but yes, we should get guess, I guess, because it's winter. We're going to have to leave it there. Thank you very much to Maudi Lentswane. He's the Managing Director of Lehumo Capital, talking to us right here on News Today on this fantastic and fabulous Friday afternoon. We call it the Triple FA every Friday, only here on SABC News 24.